Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Quora, where we dive into the world of finance and explore the latest trends that are shaping your investments. Today, we're talking about a game-changing development in the crypto ETF space. Imagine being able to tap into the growth potential of digital assets while still maintaining exposure to the stability of traditional equities. Sounds like a dream come true? Well, it's now a reality thanks to Cyber Hornet, an asset manager that's just filed for 3 new exchange-traded funds that combine the S&P 500 index with Ethereum, Solana, and XRP. These funds are designed to give investors a middle ground between the resilience of large-cap U.S. equities and the upside potential of digital assets. By allocating 75% of their portfolio to companies within the S&P 500, Cyber Hornet is ensuring that investors get the stability they need while also getting in on the growth potential of these emerging assets. But what's really interesting here is that Cyber Hornet has taken a different approach than some other crypto ETF issuers. Instead of just focusing on 1 or 2 assets, they're blending exposure to multiple digital assets with traditional equities. This structure helps investors capture the upside potential of crypto while staying anchored in traditional markets. Now, let's take a closer look at how this works. According to Cyber Hornet's filing, each fund will allocate 75% of its portfolio to companies within the S&P 500 index. That leaves 25% for its respective digital asset or its associated futures market. For example, one fund might hold 75% of its portfolio in large-cap U.S. stocks like Apple and Amazon, while holding 25% in Ethereum. But why is this approach important? Well, it's because many investors are looking for ways to diversify their portfolios without stepping away from traditional equities altogether. They want to be able to participate in the growth potential of crypto without taking on too much risk. And Cyber Hornet's new funds are designed to give them exactly that. It's also worth noting that these filings come at a time when investor interest in diversified crypto exposure is growing substantially. According to Morningstar, Cyber Hornet's earlier success with a Bitcoin 7525 fund was one of the top performers in the large blend category last year. And with the SEC's generic ETF listing standard now making it easier for issuers to launch innovative products, we can expect to see more experimentation in this space. So what does this mean for investors? Well, it means that they'll have access to a new way of getting exposure to crypto without taking on too much risk. It also means that Cyber Hornet is pushing the boundaries of what's possible in the world of crypto ETFs. And as we all know, innovation is key to driving growth and returns in this rapidly evolving space. That's all for today's episode of Quora. Thanks for joining us, and we'll catch you in the next video.